Good morning. Thank you all for joining the call. I want to make sure we got together with our LPs to talk about the fund in particular. Hopefully you all were able to participate or at least see the review of the call we did a week ago Tuesday, kind of on the general market, so I won't spend a lot of time on them right now. But just a quick kind of top-down view is obviously the policy or the Fed has created in the short-term and long-term interest rate markets is impacting everything, including crypto. I believe that in the period of only a few months, crypto can decouple from the overall macro markets and get back to its long-term secular trend, but that's something we have to see happen. So the agenda for today is we have Paul and Joey here as well. Obviously, always happy to take questions via the Q&A feed. Questions on Venture Fund 3, questions on anything in the markets that you're interested in, happy to do that. And on the first slide, we just have an update on the fund itself. We have 33 investments in the fund. The marks as of kind of real time are at 10x. That is tokens and everything is liquid priced at their current values in the markets, and then anything that has a lockup is discounted. That only represents 1.5% of the AUM right now, $31 million. There's 8 positions that have lockups. And then venture equity is marked at its last funding round. So with that, I'll hand it over to Joey to start talking about the portfolio, and I'll be back at the end.
Hey guys, I think Joey might be running late. Maybe I'll take some of the slides until he hops on. So if you look at the portfolio right now, I mean, you see a breakdown across a few different categories. You see the exchange category, you see financial services, decentralized finance, which includes things like 1inch and let's see. Oh, Joey, it looks like you're on then.
Yep. Yeah, I'm on.
Okay, perfect.
Awesome. Yeah, my internet was just taking a while to load. Okay, so on the portfolio side, kind of high level over the portfolio, Paul already mentioned, a lot of DeFi stuff like 1inch, also a lot of like infrastructure, things like Starkware, which has raised another financing round a few months ago. A good amount of exchanges still, exchanges kind of in overseas jurisdictions, which has been kind of a staple of Pantera's strategy over the years. And then there's a handful of financial services companies and then a handful of consumer. And there's also some companies that kind of bridge the two. If you look at something like Amber, sort of a cross between financial services and consumer. And then on the infrastructure and tooling side, I'd say kind of one of the most successful companies in the portfolio is Alchemy, which raised a financing round a few months ago at a $10 billion valuation. So, and we invested at around 70 million way back in the Series A. Looking at some stats, so there's a few different ways to break it down. One is kind of like what capital do we invest and where, and that's fairly diversified. I'd say like our strategy mainly is just going kind of with the market and investing in stuff that we think is undervalued relative to that. But it actually kind of coincidentally came out pretty diversified. There's roughly equal portions in infrastructure and tooling, exchanges, financial services, a bit smaller portion in DeFi, and then relatively small portion in what we consider like consumer facing applications. But then if you look at what's driven most of the value, it's really heavy on the infrastructure and tooling side. There's a couple of reasons for that. One is if you look at Alchemy, it's a huge driver there. Another big driver is Near. And so if you look at those two projects, they provided a huge amount of value in the current portfolio value on the infrastructure side. And then smaller portions on exchanges and financial services. If you look at kind of top 5 contributors to fund performance, so you have Alchemy, which we already went over, Amber, Wire, FTX, and Near. I think one thing that's interesting here is, FTX, primarily a huge portion of the value driver there has been the FTT tokens that we own through that acquisition of Blockfolio. And then Near obviously is a layer one blockchain. It's still a 20x despite the recent drawdown in the market. So if you envision, when we would probably liquidate the fund and kind of the next bull cycle, I think that TVPI will be, way higher on Near. And then if you look at Wire, that's an acquisition that already occurred. They sold to Bolt a few months ago. It's just kind of pending final closing. And so if you look at performance kind of on a more macro level, the very highest level average kind of TVPI is about 8.5x. We own about 6.4% of companies on average. We've taken 5 board seats, and the average IRR, over the fund is 169%. And one thing that's interesting about the last slide is if you look at, some of the largest returns, a lot of them have come from token investments. One that wasn't on there in the top 5, but I think it's actually number 6, is Audius, which is a decentralized music streaming protocol. That's about a 40x TVPI from where we entered the position. Near we already went over. Paul mentioned 1inch. 1inch is really interesting because they actually have had very strong kind of fundamental usage growth despite the kind of bear market sell-off across the board. And so I think it's an asset that's really exciting for the next cycle because of the fact that, they've been seeing pretty strong growth. They've also been seeing relative market share increases. And so I think they're pretty well positioned for the next bull market. And then there's a handful of kind of other projects that are a smaller portion of the portfolio, but, still have some sort of token exposure. From a realization standpoint, this is actually Paul. I'm going to hand it over to you, Paul.
Thanks, Joey. So from a realization perspective, you can see 6 companies that have at least partially realized investments. We partially realized Audius, which is decentralized SoundCloud. We fully exited Back, which went sort of public with the SPAC. And then, FTX was an acquisition. And then you can see the rest of these over here. Stake was a pretty good acquisition. That was an acquisition by Kraken. So, we're pretty bullish on the staking market and what Stake could do in terms of increasing the value of Kraken shares. So, we think that that is a really great partnership. Looking at these 6 companies, it's an average of 14x TVPI in terms of the exits. So I'll go through 2 investment highlights just to give you guys a little bit of case study on, when we got into these companies. They're obviously both big drivers and, what we've been doing with these companies since and, sort of where the prospects and potential exits are for these companies. So the first one is Alchemy. Alchemy has just been a huge winner for us, TVPI about 43x. They are the leading developer platform, sort of the Amazon AWS for blockchain and cryptocurrency. We invested into the company as they pivoted from being a crypto data company to being an infrastructure company. Their data company was using their infrastructure. So really saw a need for infrastructure for decentralized applications. When we invested, we led the Series A. I took a board seat, and since then they've gone from maybe a couple 100,000 in ARR to quite a bit north of that, and they've done 105 billion in on-chain transaction volume, over 10 million users. They service 60% of the Ethereum decentralized applications and about 95% of the NFT applications. They've grown the team quite a bit to now about 80 people. And they've expanded their product to include beyond nodes, different APIs like NFT APIs and notifications, and have also gone cross-chain, servicing not only Ethereum, but other layer 2s like Arbitrum and Starkware. They've also expanded over to, or moving over to Solana, which I think is a fairly big deal. We've been fairly helpful with the investment, everything from helping to grow the team. We've hired some of their so their senior guys, and then also helping out with sales, marketing, business development, and product and strategy. So we're the only investor since the Series A that's invested into every single round or gotten to invest into every single round. So, I think Alchemy is going to be, in a great position to potentially, go public. I really feel like they have a great set of investors and a great position, category leader. And there's a lot other areas in which they could sort of expand to and maybe even decentralize a bit more too. So really excited about that one. The second company I'll talk to you about is Amber. So Amber was actually sourced from, us being a user, a client of Amber. So Amber is a trade execution / prime brokerage, and now kind of moving into more of a neobank Robinhood type product for Asia and the US. So when we looked at the deal, we got excited about it, and we led their Series A. We co-led it with Paradigm. Dan is on the board. We've been very, very helpful with them, everything from helping them grow the team to think about product and strategy, and helping them. Actually, I think the biggest thing is really introductions to potential clients. A lot of high net worth individuals and institutional investors, helping them fundraise, which also leads to more clients. Along the way, they've really traded over 1 trillion in volume, and you can see some of the numbers over there. Lots of institutional clients, and they are really expanding their product to not only focus on institutional investors and trading and structured products, but even going into other areas, knowing that the consumer side of things and their sort of earn and yield product has generated most of the revenue. They're looking to get into NFTs. They're looking to get into gaming and really sort of become that WeChat, that mobile app layer for all things application related. They're also looking to get into more things around, derivatives and lending. And I guess one question you may ask is, have they been affected by what's going on with some of the recent things with 3AC or Celsius or any of the other sort of things that's gone on in Terra Luna, et cetera. And they have been minimally affected. So they really do a great job of risk management. The founders come from Morgan Stanley and they come from the trading and derivatives background. So we have participated in every single round of Amber since, and we really feel like a potential exit for Amber could be also an IPO, either in the US or on the Hong Kong Stock Exchange. I'm going to send it back to Dan for some more macro views.
Thanks, Paul. So we're going to publish our investor letter today with a lot of this data, some of which we've shared in the past, but a lot of it's new. I just want to do a couple of slides here to just give you a quick update. It really is 2 policy errors that the Fed did. They kept the overnight rates way too low for way too long. The real Fed funds rate, which is the Fed funds rate minus a good measure of core CPI, is way historical record, all-time record, way worse than even the 70s. It really is crazy to have real Fed funds at -9%. So the Fed is extremely slowly coming to grips with that. And I think they're going to have to raise rates quite a bit to slow the inflation thing down. And then the other big thing the Fed did was for the first 95 years, they didn't manipulate any rates other than the overnight rate. In this crisis, they decided to control long-term interest rates and ultimately ended up loaning 200% of all mortgages issued in the United States in the past 2 years. I mean, it's just staggering how much mortgage lending they did. They drove the 10-year note down to 54 basis points and 30-year mortgages to 2.6. And if you are willing to loan people money for 30 years at 2.6%, they in an environment where houses are going up 20% a year, they will do it, and a record number of Americans did. And so on the bottom right is a graphic of the scale of the bubble they created. It was 15 trillion overvalued. And Unfortunately, it is deflating now. So on the last slide, talk about the impact on crypto. We had a special call a week ago. It's on our website if you want to catch up on how we think it impacts. But there has been I think, relatively short-term connection with the risk asset markets. As you can see in this little graphic on the screen, there were 4 previous times where the S&P went down more than 10% while Bitcoin was been trading. And in those instances, correlation went up a bit and stayed high for about 71 days, and then it faded. This time it stayed high for several months, but I think that it's very likely to break down soon. And if you really think about it as institutional investors need to put money to work, if I'm right and then the Fed has to raise rates for quite a while, you certainly don't want to invest in bonds. And then most other things that we're used to, like stocks and real estate, certainly have a very direct link to interest rates. So if you're looking at where could you put fresh capital in a rising rate environment, there are things like gold or other commodities that don't have any connection to interest rates. And then digital gold, Bitcoin, shouldn't have any connection to interest rates. And so I think that within a few months, they will decouple. And then the other important feature of our industry is, given that that Bitcoin and other cryptos came off really hard, it's spawned a whole cycle of deleveraging where things like Terra Luna had to be sold, and that had 4 billion of Bitcoin that had to be sold, and then that caused Celsius to be in trouble, and then that caused BlockFi to be in trouble, and Three Arrows. And so we've had this kind of cascading effect of levered entities being forced out. If you put leverage on something that has gone down 70 to 90%, that's obviously going to be difficult to survive. And then a lot of people compounded that leverage by expressing it in Grayscale's GBTC Trust, which is a closed-end Bitcoin fund that at one point traded at a 6 billion premium to net asset value. And given that entities like Three Arrows at one point owned 6% of all GBTC, they're being forced out, and that's driven GBTC to a negative 34% discount. That seems like there probably are a few more shoes to drop in that leveraged washout, but not like more than a month or two of that. For better or worse, crypto is incredibly efficient, and so it's being worked out pretty quickly. A cool thing to note, though, is that although a lot of centralized lending protocols like Celsius, centralized venture-backed companies like Celsius and BlockFi are struggling and or out of business, really nothing bad happened in decentralized DeFi. All the protocols, Aave, Compound, all those, have been functioning perfectly as planned, are very transparent, and it's allowed, the DeFi markets to function well. Obviously, volumes have come down as less people want to speculate on crypto right now, but the machine worked, as one would hope it would. With that, that's the end of the prepared remarks. We've been happy to take questions on the fund or crypto in general, to the extent you have them. And I'll let Joey or Paul grab a couple questions, and then I'll come back on.
Yeah, there's Richard Gunn asked a series of questions. One, like, have any investments been kind of fatally impaired by the fall in the market? I think like the main impairments we've seen are not necessarily like pertaining to like macro, but are just other reasons. So like, for instance, if you look at like one example is like kind of like the contagion from like the Three Arrows stuff. We have like one or two small investments that have some contagion from that. But for the most part, most of the companies we've invested in have very long runways. Pretty much everything we've invested in that's at a later stage, we've reached out to them and talked to them, and they've all basically cut, burn, let go kind of unnecessary staff, reducing marketing spend, that sort of thing. So I think the portfolio is pretty well positioned for the next few years. I think the bigger risk is there's just some stuff that like needs to grow into its valuation. Like somebody else mentioned, it's been mentioned a few times, Alchemy, their most recent round was at 10 billion. There's obviously a lot to grow into there. But they also have, an insane amount of capital to get there and a very, very long runway. Because they've always been very conservative on cash. Let's see. And then there's another question about like, what portion of investments will come out stronger here. I think it's basically anyone who has, sizable cash runway and a business that kind of has core product market fit. And so if you look at the portfolio, companies like Alchemy, companies like Amber, they're very well positioned because they're market leaders in their respective areas. They have a huge amount of cash, and it's going to be really hard to get that amount of capital and compete with them, especially in the current market regime. And so if you fast forward a few years on the other side of this market we're at right now, I think they'll kind of just like basically unstoppable leads. They'll have such a huge moat that that'll be very hard to compete with them. And then I guess so one last question to answer there is on NAV impairment. Basically, like how much of the NAV impairment that we're seeing right now is just mark to market versus how much is like stuff that's actually not going to come back. I would say on the liquid side, I think it's actually mostly just mark to market. Like I think a lot of those positions we own will come back in the next bull cycle. Things like Near are getting a good amount of people actually building on them. I think it's a really, really cool protocol. And I think stuff like that, it's not going to like go away over a 2 to 3 year horizon. And instead, I think it'll, have developed a lot and evolved a lot by the time we're in a much more kind of positive price action market. So I don't view most of those as actual impairments long term, or they're more just kind of, temporary mark to market moves. And then there's a question about exits. Like how long has this market prolonged exits on average? I think it does, push things out a bit, because like if you look at like a couple of years ago, there were a huge amount of SPACs, huge amount of IPOs, and obviously that window's sort of temporarily closed. On the flip side, I think it just means that when companies do eventually IPO, they'll be companies with like stronger metrics, more sound economics, that sort of thing. So it's the double-edged sword there.
Yeah, I'm taking a look at the questions, and I feel like we've answered a lot of the questions. I mean, a lot of more around sort of exits and distributions. And, I think as the market was coming down, we wanted to make sure that, we did sort of, move some things around to sort of de-risk a bit, both on the liquid side of our blockchain fund and also even a bit on our venture fund. So, I think that in combination with some exits that are sort of happening, I think we probably should be getting to a point of distribution fairly soon. Outside of that, I mean, let's see. Someone asked about BitGo. BitGo is got acquired by Galaxy, so I think that's going to be a great win for them. Let's see, question on Staked. Yeah, Staked was fully acquired. Yeah, I think most of the questions have been sort of touched upon. Yeah, it looks like we answered most of the questions. There are a lot of questions around maybe some marks and distributions, which we've covered, and we can answer in more detail if you send an email to us. But outside of that, I mean, really thank you guys a lot. It's been a journey through the last, I guess it would be about 4 years for Venture Fund 3. And I think there's still a ways to go in terms of making sure that these companies fully exit to their potential. But I think we're off to a great start, and we're really glad that you guys are supporting us and along for the ride. So if you guys have any more questions, feel free to email ir@panteracapital.com or any of us directly with our first names at pantera.com. And thank you so much for being part of the call. We'll talk to you guys soon.